All right. Now this is first YouTube live events. So for people who have followed me, I usually record it offline and then load it. But it took too long actually for me to render in the video. So for me, I just think since we have a little bit update nowadays, I will try to run it through live version every Sunday, and probably around this time 11 p.m. to midnight New York time. Just remember it's New York time. If you just follow New York, that'll be easier because we do have the daylight saving changes. So again, the whole purpose of this basically this video is just give you weekly analysis for the market in a fundamental point of view. And basically that's how I trade it nowadays. I really look at the market in a weekly base. That means that I look at market and to see what's coming up for this week and find out opportunity. So my trade, it's 1 hour for intraday base. Sometimes I hold it for 1 or 2 days. Sometimes I hold it over the weekend. Very rarely, because I just don't like to, I like to treat the market in a weekly basis. I find that works for me better psychologically, because over the weekend you're gonna have a lot of new fundamental events, and there's a lot of new sentiment coming up, in the weekly base. So for me, this is the new trading style, basically update, since May and June, and it's been work quite well. So I do intend to just keep it going. Just give me a second, okay, guys. Sorry. So again, I don't know how this event is gonna how is it gonna turn out the result in terms of the video, but it doesn't matter. Just the first time running it, and it's going to be recorded, automatically released on YouTube. It is unlisted now, so it's only for members. If you are interested to attend it, feel free to join my website. It's completely free. You will get a link every Sunday to attend this event, so you can actually chat with me if you have a question live. And you can just chat on the box beside YouTube live, and that will be very easier for you to learn, because I think best way to learn is through asking questions. And for me, I don't intend or pretend to be guru at all, because for me, fundamental trading is very new. I started learning 2016 January, and it took me actually a long time, because 2017 I was prepared to just start go live, but realize I'm still at break even in the first quarter of 2017. And it is what it is. I'm trying to be very honest here. It's quite a curve for me. So, but I find out for myself the best way to really learn is to ask questions. So take this chance. This is a great opportunity. And if any question you ask, I don't know, I will go back and ask my mentors. I'll ask the people I follow. So again, I think that's the best way to learn. Okay, so here is, just give me 1 second. Let me pull out. So basically, I look at the market, again, like I said, from the fundamental point of view. So first thing I do is I go to a calendar. I see what's going to happen this week. And aside from this, I also going to type out a key events. I also have the central bank point of view, which I just type out on my journal, basically. So let's take a look at that. Just give me 1 second. So basically, I have this key event every Sunday, and sorry, it looks like it's not showing on my screen. I don't know if it's showing in your screen. So every Sunday I put out what's the key events for next week. Now for this coming up week, there's a lot of central bank speakers coming up, and those are generally very good catalysts to trade. So the way I look at the key events, not really just looking at the forex tasters. you're just looking at the forex factories, if you're just looking at forex factories, I know people always looking at the color. We say the red color is more important, then it's orange, then it's yellow. That's actually not the case, because the way to determine which event is important or not is really depend on what the market is looking for at the moment. What is the central bank looking at? So, for example, if you look at British pound, we do have the current account, final GDP. So if we say, okay, current account is red more than final GDP, does that mean it's more important than final GDP? Not really. And in fact, all the British pound, the UK data right now are not as important as the political updates, where they started the pre-exit negotiation last week. So you have to follow, if you want to trade fundamentally, you have to follow exactly the sentiment of the market. What is the market paying attention right now? And that comes through experience, comes through your, if you trade through the event, you're looking at the technical chart, looking at the price action alongside with the fundamental updates, then you will know exactly what's driving the market. So for British pound, all this economic data is important, but that's not the main catalyst. Right now, what's really driving the pound is the pre-exit negotiation. Now, if you look at all the calendar, do we have anything that says pre-exit negotiation? No. So that's why it's a tricky part, because that's actually the most important thing. And that's why you have to go to any other news source. You can go to Bloomberg, you can go to a BBC, you can go to Reuters, you can go to a RankSquawk. It's depending on if you want a free service or the premium service. But understand that what's driving British pound is the politics, is the geopolitical events. It's not the fundamental data. Now, for that being said, the only thing that is driving British pound, aside from pre-exit, is the Bank of England. Now, again, when you trade this kind of events, you don't want to, you have to understand fundamental data. You have to look at them as a series of data. So don't treat a single event as a single event. So understand the past history. Therefore, you can have a better judgment for the moment, for the present. So for Bank of England, exactly what happened previously is that because of the depreciation of the currency, so now their inflation has surpassed 2%. And now they're thinking that there is a risk for the inflation to keep going higher. So now they want to hike the interest rate. So that's basically the whole story for Bank of England. Now you can see that, I think it was the week before last week. So it's probably June 11 to June 17. Let's see. Yes, right here. So you see bank rate vote. You actually have 3 more members who think they should hike the interest rate. So although the official cash rate, asset purchase facilities is all kept unchanged, but this is very significant when you're looking at the vote. So that's saying that the stance of the Bank of England has slowly changed to a more hawkish side, to a more hiking bias. So if you have that, the previous story, that's why it's more of a tradable event. So today, Tuesday, we're going to have Governor Carney speaks. This is going to be a catalyst. So I don't know what kind of event this is, but basically the market is looking at if he's going to deliver any more hawkish statement to drive the British pound up. And if he's not doing that, or if he's suddenly become more dovish, of course, British pound will drop. The only thing to understand for British pound right now is that it's very hard to trade because of geopolitical events. So you can trade this kind of events. I personally will trade it depending on what kind of speaks he's going to give. I also will actually trade this kind of current account or final GDP if we have a deviation. So when I talk about this kind of fundamental data, it's only tradable when you have something that's outside the range, and that's why it has a price. But aside from that, to trade fundamental data, you have to understand how long are you going to hold it. The hardest thing to trade a catalyst is that you don't know how strong that catalyst is going to be, and you also don't know whether the whole thing is going to keep going for how long. And the way to realize it is if you keep a close eye on the market. So for British pound currently, because of the geopolitical events, we are not, me personally, not looking to do anything other than intraday trade. So for me to taking any British pound trade, I'm only aiming to do it in an intraday base. That means I'm going to maybe trade the event, maybe only aiming for 30 to 50 pips at best. And that's it. I'm going to wrap it up. The reason is because no matter how much hawkish comment that Carney delivered, any geopolitical event that comes from the Brexit negotiation can completely turn this thing upside down. Now, if you take like a chart, that's exactly what happened. This red candle was from the exit poll, basically the election that where the Conservative Party lost the election. Well, they didn't lose, but they lost the momentum. Basically, they didn't get as much seat as they were expecting. But look at what happened afterward. It's just an up-down movement, basically. So if you look at it really in a bigger perspective, we are in a sideways movement. It's just between 128 to 126. Now, 200 pips is nothing in a cable trade, right? So that's basically, if you want to do a intraday trade, definitely you have a lot of chance to make decent pips. But if you're in a daily perspective, if you look at this in a daily perspective, really nothing much happened after this red candle. You're really still within the range. So not something that I will personally do. I'm really just aiming for an intraday trade. Now, back then, I do have an order that got filled at 38% here. So I have a pending order right after the general election. I got filled here, drop a little bit, went up a little bit, now drop a little bit. Now seems like it's gonna go up a little bit. I will say this break even because really not interesting to trade British pound again in a more long-term perspective. Really just looking to have a short-term intraday trade, and that's my plan for British pound. So I'm going to talk about 8 currencies, just give you a fundamental point of view and what can you do. So for Japanese yen, Sunday, of course, you have this BOJ summary of opinion. For Japanese yen, it's very easy to trade. Why? Because fundamentally, it's very weak. The inflation is still way below the target. So nothing much to trade as the currency itself. Now, the way to trade it is really just trade around the risk sentiment. That means that it's a safe haven currency that if you have a very chaotic events in the world, people will buy Japanese yen as if they will buy gold. Vice versa, if the world is peaceful, if there's no events, then people will not hold Japanese yen because they are quite bearish fundamentally. See, if you're holding Japanese yen, you actually have to pay the interest rate because it's negative. So just keep that in mind. Therefore, this kind of fundamental data is not tradable for Japanese yen. Japanese yen, it's a currency that I usually just pair up with other pair. That means that maybe, for example, if Bank of England, Carney deliver a very dovish stance, then you might be able to sell pound yen in an intraday base again. Oh, what's going on here? Okay, that was a PV point. So that's what general I'll do. So if you say, okay, we seems to have a resistance right here, then basically you say, okay, 142 maybe a good whole number to hold. Then if suddenly you have any negative news from Brexit negotiation, or you have any negative news from Bank of England, you can sell pound yen at the critical resistance level. So that's basically how I play with Japanese yen. Now, Euro is more interesting, and it's also the main event that I focus on for this week. And the reason is because right now it's in a sideways movement. Market anticipate that ECB to give a tapering talk. That means to stop the easing. And if you look at the fundamental data, everything is in a pretty good trend right now. However, it's still too early to say, and that's according to the ECB President Draghi. So why is it interesting is Monday, he is going to have a speaks. Tuesday, he is going to have a speaks again. And Wednesday, he is going to speak again. So this is really 3 days of events where he's going to speak. And really what's driving Euro right now is the central bank point of view. Because the fundamental data are also good, but it's just no more surprise. It's not really a tradable catalyst. So really it's depend on whether the central bankers are ready to become more hawkish. And that's where the market is anticipated. Now, how do I know it? Again, I follow the market. I follow how the price action works in accordance with fundamental data or the comments. Now, all you need to do is just keep doing what I'm doing right now and follow the market. It only takes you, I say, weeks to months to really have a grasp of how the fundamental affects the market and what is the market looking at. Once you have these two core concepts, you will start to understand exactly how to trade this kind of fundamental data. A lot of pitfall for trader is that they jump into, maybe they trade technically and just, maybe not successful. So they say, okay, I'm going to switch to fundamental. So what they do is they look at these kind of events and they just look at a single event. The really risky part to do that is that that's not how the market works. You have to understand the majority of traders who are trading fundamental data are a big hedge fund traders, big institutional traders. They don't move their money just like that, right? They always price into a big economic event. So, for example, a lot of people like to trade NFP. Now, and they always got very disappointed because they say, hey, how come the NFP is a good figure, but US dollar dropped? And the reason is because the single data has no meaning. If you listen to any central banks, they always tell you this. They say the single data has no meaning. Means that you have to follow whatever happened consecutively. You have to follow it in progress to understand exactly how the market function. Yeah, I understand this is the economic cycle of the country. So of course, everything will take a more longer term. Right? If you look at everything, it's month to month, year to year. And for people, including myself, coming from a technical background, we always like to really, maybe, first, if you're a technical trader, maybe you would like to draw a support here. And once you have something hitting there, then most likely things will turn around the next window, which might be just next 4 hours. If you carry that mentality to a fundamental trading, you will be quite frustrated because the fundamental does not work just like that. It does not have that turning point. You have to follow up the events. But a good thing about it is that it's quite accurate. So once you have a grasp of it, really you will have a very accurate prediction for the direction in accordance with the result. And that's one thing I really like about trading fundamentally is that the probability of winning is very, very high because it's really trading the fact. You really, there's very little guessing game basically. So for, as I mentioned, British pound, how I'm gonna trade this event, very simple. I'm going to follow Carney and see exactly what he's going to say. And that's, for me, it's a very little guessing game. Because if he's hawkish, then that's going to drive pound up. If he's dovish, that's going to drive pound lower. Same thing as this final GDP and current account, things like that. If all this is a positive data, outside deviation, it's going to drive pound up. If it's a negative surprise, it's going to drive pound lower. The only thing you need to know is exactly how strong or how long the effect is going to be. Now that comes with a more sort of experience, but also comes with judgment. So how do I know I only want to trade intraday trade? It's very simple because I had placed a trade, as I mentioned previously, and just by looking at price action, I realized, okay, no matter what happened to fundamental data or Bank of England, we don't really see too much movement coming up. It's really just sort of in the range bound ever since this general election. So once you have that in mind, you understand what's driving British pound is the politics. Any other thing will take a second place. So that's why I know that for me, not interesting to hold anything in a longer perspective, in the longer term trade. So let's keep going. Core durable goods, all these things are not tradable for firm. Why? Because again, central bank is not looking at that. No other trader is looking at this. Now, for that being said, of course, if you have a very good result, you're going to see US dollar go up. But for me, it's just a very low probability trade. So I'm not really interested to do this. No, to have that analysis is to first of all understand what's driving the US dollar right now. So what's driving the US dollar all previous year, 2017, is that people anticipated a hiking cycle Federal Reserve. That's the first thing. Second thing is that people are anticipated a very pro-business White House administration. That was the biggest driver basically for US dollar in 2017. Now, right now it's 2017, almost the end of June. So what happened to the US dollar right now? Well, very simple. First of all, has the Fed hiked the interest rate as markets anticipations? Yes, that had happened twice in 2017 already. Now, how many times did the Federal Reserve say they are going to hike in 2017? They say they are going to hike 3 times. That was the general presumptions. So now, since they hike once, twice already, they also says that the recent data is really up and down. So they are not looking to hike anytime soon. So the market now anticipate the next hike to come in December. So that means that between now till December, there is no more catalyst to drive US dollar higher from a central bank's point of view. So that means, remember what I said, there were 2 major reasons to drive US dollar higher at the beginning of 2017. The first one is the Federal Reserve. Now that one has been moved, so we don't have that one anymore on the table until December. What's the second one is the White House. Why? Because the beginning of 2017, since Donald Trump got elected, there were a lot of fiscal policy, a lot of new policy that seems to be driving the market, and people were actually afraid that the market is going to be overheated. What happened in the first 6 months? His healthcare bill, failed first time, second time struggle. Now finally they passed it barely. He is under investigation right now because of the Russian relations. Everything he has done so far has been blocked not only by the Congress, not only by the Congress of the Democratic Party, but also by his party and by federal judges. According to his immigration ban. So what I'm trying to say, the market has been very disappointed toward his ability to push these fiscal policies. So that means that all those excitement for Donald Trump and the new White House administration has been quite basically not realized, basically very disappointed for 2017 in the first half year. So that's why the question you have to ask yourself, say, okay, if we don't have any more cash from the Federal Reserve to drive the US dollar higher, if we don't have any more catalyst from the White House to drive the US dollar higher, then what's left to drive higher? If you understand this kind of micro analysis, then you know, okay, there seems to be no more catalyst to drive US dollar. And that's why US dollar has become a very neutral currency. Now, I wouldn't say it's bearish because there isn't any catalyst to drive it lower either. So right now, from my point of view, neutral currency. But we do have a more bearish bias. And the reason is because people got too excited for US dollar at the beginning of 2017. So that's why you will see a lot of repricing and repositioning US dollar. So basically, The reason US dollar is in a more bearish cycle right now is because people were anticipated for a lot of good events to happen to drive US dollar higher. And now they realize, okay, those events are not going to happen anymore. So therefore, they are going to sell US dollars. Now, if you have that concept in mind, the US dollar will have a natural tendency to have a bearish bias right now, especially if you're trading in a more, I wouldn't say term, in a more midterm to intraday perspective. So that's why if you keep in mind, you realize, okay, so when I look at all these events, what are the main events that's going to drive the US dollar higher or lower? For me personally, not much. Core durable goods, consumer confidence, all these are not a big enough events to drive it higher. So if you look everything, even the GDP data on the right here, final GDP on Thursday, it's not going to drive it higher. So the only thing that have any possibility to drive US dollar higher or lower will be Federal Reserve Chair Yellen speaks. But even though Yellen is going to speak, it's very, very unlikely she is going to deliver anything new. Why? Because Yellen, again, how do I know it? If you follow the chair central banks, you realize they have their tendency. And this is very interesting to trade in this way because people are the creature of pattern and habit. So means that all people are human, just like you and me. So they have a habit, they have a personality. So for them, they will certainly, sometimes be consistent with their personality. Yellen is very data driven. She will be very hawkish or dovish, depend on the data and depend on the plan. Since we don't have anything new from the fundamental data, we don't have anything really bad. We also don't have anything really good from the past. So why would Yellen suddenly be hawkish or dovish? That's a question you need to ask. And I'm asking this, I'm not asking you. This is really the question I ask myself every time I write a trade plan. I always ask myself, say, okay, what's going to drive US dollar higher? Okay, why is Yellen going to be hawkish or dovish? What's the agenda? What's the political motivations? What's the economic motivations? Now, if I cannot find anything, for me, it's not really an event to trade because most likely it will not any big surprise. Now, for that being said, I will always try to be at my desk. Why? Because, remember last week or previous week, we have the Bank of Canada who suddenly surprised the market to give a very hawkish comment. Those are the things that you have to keeping that you don't know what's going to happen whenever central bank members or chairs are going to speak. Really, there's so much you don't know in the market. It's best to be there. And the good thing about trading fundamentally is that you have this kind of time to put in your calendar to really just try to be at desk at this time. And other time, you don't really need to stay at your desk. That's one thing I like about it. So that's for US dollar right now. I already give you a fundamental view. So I give you Japanese yen, euro, British pound, US dollar, New Zealand dollar. Okay, talk about New Zealand dollar. Don't really have much going on for this week aside from trade balance. Business confidence. So again, first of all, we need to do is looking at a major currency from a central bank's point of view. So what's happening right now? Last week, we have RBNZ, which is the Central Bank of New Zealand, giving out right here, giving out the cash rate and rate statement. So they kept the rate unchanged as expected. The statement was also quite neutral. Now, for New Zealand, it's very interesting. Very strong momentum to push it higher is because since 2017, economic-wise, they are doing quite well. Fundamentally, their GDP, employment, and inflation have all picked up quite well. Now, sentimentally, who's going to decide the interest rate? The RBNZ governor. The central bank, however, is very dovish and has been very dovish since 2017 or previously. So that's why you have to have this kind of backstory to understand, okay, what's driving the currency up is the central bank's point of view. But most central banks use a fundamental data as a guideline. However, they will have their own personal bias. So in New Zealand dollar, it's very, very interesting, or very simply put, is that fundamentally it's looking to uptrend. However, from central bank point of view, they are very dovish and they are not willing to give any hawkish comment. The reason is very simple. They don't want their currency to go higher. I understand that New Zealand dollar is already #1 interest rate curve at 1.75. So anything can very easily push the currency higher. Now that's where the economics knowledge comes in. Is why very simply. It's not. I'm not trying to complicate things. Why is a high currency or a higher currency going to hurt the economy of New Zealand? Well, very simple, because they rely heavily on the export. So if the money becomes very expensive, that's going to hurt their trading business. Now, as you can hear from my speaks, I definitely coming from any academic background. But because of that, I think it's a quick advantage for me to really deliver this kind of concept in a very simple everyday language. So their government, the central bank don't want the currency to go even higher. That's why they will always have this tendency to try to talk down the currencies. So now you have this backstory, and what's going to happen to the market? If look at hindsight, we don't know, right? Okay, now you're telling me the central bank is very dovish, but the fundamental data is quite bullish, basically. So in that case, what I do is I simply look at the price action. And that's why, trading fundamentally does not mean you completely ignore technical analysis. On the contrary, I think if you align fundamental data and technical data together, you have a very, very powerful tool. So look at, it's very simple. Anybody can tell me or tell you this is a very steep uptrend since May. So basically, look at New Zealand dollar, keep going higher. What does that mean? That the market choose to ignore the central bank. Instead, they chose to focus on the fundamental data. For me, as a trader, I never want to argue against the market. And that's a lot of fundamental trader make this kind of mistake. Now, this is an advantage for technical trader, because technical trader has a tendency to just follow the price action. And I always say trend is your friend, and they are absolutely right. For fundamental trader, on the other hand, sometimes they're looking too much into a fundamental data. So they're always trying to say, okay, the market is wrong. The market is wrong. But for me as a trader, I'm not an economist, right? I'm not trying to hold a currency for years, right? For me, again, I trade rate ways. For me, I never want to say I'm right, the market is wrong. No, I actually always try to just follow the market. So for me, to have that backstory for New Zealand dollar fundamentally, and just look at price action, I come to the conclusion that, okay, the market chose to follow the fundamental data instead of the central bank. Therefore, New Zealand dollar to drive it down is a very negative fundamental data. And if you look at this week's, we don't really have any data. Again, major fundamental data for any country: inflation, employment, and GDP. So we don't have any major data. That means we don't have any catalyst to trade New Zealand dollar. That means the New Zealand dollar will still maintain whatever force that it has previously. So look at New Zealand dollar, you realize, okay, it's going to be uptrend. Why? Well, ask yourself, what's going to drive New Zealand dollar down? Is there any catalyst this week that's going to drive New Zealand dollar to the downside? Is there any catalyst this week that's going to change the belief of the market that people are going to start selling New Zealand dollar? If your answer is no, that means that New Zealand dollar will have a probability to keep going higher. So that's it. A very simple way for me to look at the market. Now, that doesn't mean I will just jump in and buy New Zealand dollar. Why? Because I need to ask myself, what's going to drive it even higher? Is there any event catalyst that might drive it higher? Again, because we don't have any major catalyst. So no, I wouldn't say there's any catalyst to driving higher. And that's why my plan is to stay on the sideline, part for New Zealand dollar. So how am I going to trade New Zealand dollar? It's because it's to use it and trade with other currency. That means if, let's say, I'm looking to trade, maybe euro upon Draghi speaks. So that means that if tomorrow President Draghi deliver a very dovish stance, means very negative for euro, what I might do is to sell euro NUSI. That would be my plan, to sell euro NUSI as a general direction. How am I going to really trade it? That it depends on your own personal choice, because technical entry is really depend on your risk, and your risk is depend on your psychology. So I cannot really view exactly a trade call in this kind of analysis. All I can do is give you a general direction and a general pair that I might looking to trade according to each event. So that's it for New Zealand dollar. Now, again, for euro, I don't know if I said, if Draghi is very hawkish, obviously we're going to buy euro. If he's very dovish, we're going to sell. But which pair I'm looking at? Well, quite simple. For euro, I might just buy at euro dollar. The only thing I need to watch out is that I'm at a very, very high level to buy euro dollar against very strong resistance at 1.13. That's really, I need to take consideration of my own risk reward ratio and my own risk analysis. And that has everything to do with my own psychology. So that I cannot really answer you here. I can tell you my own plan is that I'm only interested in trade maybe in the short term. If Draghi deliver a very surprise dovish or hawkish comment. If it's hawkish and if I'm buying it, I'm really only looking to wrap up at 1.12770 or even 50. You say, hey, but that's only 30, 20 pips. Exactly. That's what I'm trying to tell you. Say it's depend on your own style. The only thing I might trade to buy euro is euro Aussie. Euro Aussie, obviously, technically, you have a much better room to go because you can go from here 1.47 to 1.52. You might ask me why it's Aussie. So that's where I'm going to explain to you. So let's talk about Aussie, Australian dollar. So what happened to Australian dollar right now? Let's talk about central bank's point of view. Now, fundamentally, is nothing new happening in Australian dollar. On contrary, it's looking quite in a bearish cycle. Now, to understand how the economy of Aussie works, you have to understand it's a heavily commodity-based economy. That means that it relies heavily on its export of commodities. If you know that piece of very simple information, you know that what's driving the country's economy is the commodity, particularly iron ore, particularly copper and oil price, silver and gold. Understand that if you want to understand the backstory, you have to look at the commodity market. To the commodity market, if you look in just very simple line chart, look at, anybody can tell just looking at it, it's been a very steady down cycle. If you're looking at the oil market, this is hourly. Let's give you 4 hour. Okay, I don't know why it is so big, but anyway, if you're looking at 4 hour, again, it's quite nasty, a very steady downtrend. Right? Looking at this recreational channel, it's a very steady down channel. We haven't even able to break out of this channel to the upside. Well, in fact, we are at a very nice lower low, higher low downtrend. So what that means is that things are not looking well for Australian dollar. Why? Because the commodity market are not looking well. Aside from that, what is the central bank's point of view? Remember, understand, we have to look at things fundamentally from the real data. But we also have to understand what is central banks looking at. Now, if I look at central bank's point of view, previously, really not much going on. They are quite neutral in their delivery. They are quite optimistic for the future, but they are also cautious because they know fundamentally they are not doing too well. So just understand these two pieces. I think it's a neutral currency for me. But because the micro scale of the bearish commodity price, I'm leaning more in the bearish side for Australian dollar. And you see the way I analyze it, it's so simple that anybody who major in economics will probably think it's too simple. But I think the simplicity is a beautiful way to trade because I understand that's exactly how the market function. You have to understand just a simple concept of what's driving the market, and then you pair that information up with the price action to find a good entry point and a good exit point to make money as a trader. Understand your job is a trader, not an investor, not an economist, not an analyst. Right? My job is just to find this kind of opportunity to make some pips every week. So understand that. Then if I look at this week, I realize that okay, first of all, let's see if any catalyst that's tradable. Okay, first of all, here RBA government is going to speak. Now, this might deliver a very hawkish or very dovish comment. We don't know. So we're just gonna stay in tune. Now look at the color. It's orange. So what I say to you is that ignore the color. It's not important because the color are dead. It means the color are set in stone, but that's not how the market function. So ignore the color. If you keep looking down, we don't have any Aussie event, but we have a very important event that is a manufacturer PMI from China. Now, for many of that don't know the relationship, is that China is the largest trading partner for Australia. That means that the Chinese economy has everything to do with Australia's economy, particularly manufacturing. Why? Because if you are going to manufacture anything, you need what? You need raw material. And who is going to provide China this kind of raw material? It's Australia, especially the copper and iron ore. So this is a backstory economically to understand. Now, once you understand that, you realize, okay, so this is actually a tradable data for Aussie if we have a deviation. So basically, that's how I look at these things, right? So this is two data to trade. The other thing I just asked you, why would I want to, maybe if I want to buy euro, why would I buy euro Aussie? Very simple, because I do have a more bearish point of view toward Australian dollar. But for that being said, I also remind you, if we have a very hawkish event from RBA, or we have a very, very positive data from China, that is a risk you need to bear if you are in any short Aussie trade. So I understand you have to look at everything in a weekly base and sort of be flexible to change your trade. So what else I need to talk about when I talk about all these? Swiss franc. Okay, Swiss franc, I tell you very outright, it's not a currency I'm trading right now. But there's a few reasons. First of all is that it's a very negative currency, fundamentally speaking. Why? Look at the interest rate. It's the lowest one. It's a negative one. So fundamentally, no one is buying it. Sentimentally, it's a safe haven currency. It's just like Japanese yen and gold. And the really simple. If you have to look at economic cycle and look at the history, the Switzerland has been a neutral country since 18 something. I forgot the exact year. So that's why it's a very neutral currency. Any fundamental data is really not going to drive it. And the central bank's point of view is very consistent. They are still looking to weaken their currency. The reason is because they are also a country that heavily rely on export. So because of that, really nothing much to trade. And another thing is Canadian dollar. Now, Canadian dollar is another very excited currency to trade for now. Very simply, because 2 weeks ago, Bank of Canada suddenly came out and become very, very hawkish. They're saying that they don't think they need to stimulate the economy. That means that they're probably not going to not only they are not going to cut interest rate or have the quantitative easing any further, they are looking to hike interest rate. Market gets very, very excited. Now, how do you know that? Take a look at dollar CAD. Look at that. This red candle was the comment from Bank of Canada. We have been dropped since 1.34 all the way to 1.31, almost 300 pips. Now, if you look at EuroCAD, exactly same pattern. If you look at Pound CAD, even more, right? So that is, keep in mind, it's a very strong currency from a central bank's point of view. Have the central bank give out the reason to be hawkish? Yes, basically they were saying that the economy has been quite well. And is that true, right? I understand that central bankers have their own personal bias. So you have to look at the fundamental data yourself. So has the economy data been quite strong for Canadian economy? The answer is yes. If you're looking at the top three, employment, inflation, and GDP, things are quite well for Canada, especially the labor market is quite strong. If you look at just last week, what happened for CAD? You have a wholesale, which by better than the expected number. And perhaps the best one is the core retail sale, 1.5%. Expected number was 0.6%. And the previous year was negative 0.0. That was a huge, huge jump. Also, the retail sale, same thing, 0.8 versus 0.3 expected and 0.5 previous. Now, if you look at inflation, it's quite mixed. You have a 0.1 in CPI, common CPI, median CPI, now all this CPI, trim CPI. I will look at it, I'll say it's a mixed result because the core CPI was better than the previous. So, nevertheless, look at the bigger picture. It's a quite nice economic picture now for Canada. And that's why the central banks is saying the truth. So does that mean I will just jump in and buy Canadian dollar? No, not quite, because you have to understand the economic, the fundamental picture of Canada. What is exactly the biggest revenue basically for Canada? Aside from the service industry, they are heavily reliant on the export of their crude. So same as Australian, if you want to trade Canadian dollar, you have to understand what's happening in the oil market. And I just show you right now, it's a very, very nasty downtrend. So if you look at a picture, you say, okay, this is perhaps the biggest risk if anybody wants to buy Canadian dollar, is that oil is in a very steady downtrend. However, dollar CAD or any CAD pair is in a very steady uptrend for Canada. So that means we have a sort of a reverse relationship, right? And that's very, very rare because most of the time the Canadian dollar will go around with the oil market. So that means, again, how do I do it? Previously, I just give you an example for New Zealand dollar, right? I say that the fundamental data is good, but the central bank is dovish. So in this kind of instance, how do I decide which one do I follow? Now, very simple. I look at price action. So the oil market is very bearish, but the central bank is very hawkish. So how do we know which direction the market decided to trade? Well, look at the price action. That the price tell you. So it does look like that the market is choosing the central bank over the oil market. That means this week, the central bank government policy is going to speak, and this will be the main driver for Canadian dollar. Also, the events I'm going to trade if we have a very hawkish or a very dovish event. Now, I understand this will take more precedence over the oil price. That doesn't mean I will ignore the oil price. That just means that when he speaks, it's going to be the main catalyst, the only thing I'm focused on. But after that, we do have to also understand this is our risk. If today the oil start to break out this channel, then that means we have a more probability to see Canadian dollar to go in upside direction. So basically, that's how you pretty much analyze the market to understand how to trade it. Now, this is a very for me a very accurate way to trade it, because you're really looking at in a more bigger picture perspective with enough backstory. So every time I always not only looking at this week, I always like to look at what happened last week. I like to look at a central bank's point of view. So that's exactly how I really trade this kind of events. For data point, you could, if you are new to this, you could of course trade when you have deviation. I usually, when I first start, I traded exactly like that, and I'm still trading like that. The only thing you have to understand is that Forex Factory is a free service. By the time the data comes out, you will be late compared to other traders who have the premium service. So if the events that says 2 a.m., you might get it at 2 a.m. in 10 seconds. And the other trader with a premium service, they will get exactly at 2 a.m. Now you might say, okay, that's only 10 seconds different. Though 10 seconds can be everything in the Forex market, especially if you're only trading this kind of deviations, right? The 10 seconds might be 30, 50 pips, which is, all the profit that it has to offer in a single event. So for me, if you're new, it's really best to trade into the events. If you are trade when this kind of central banker speaks, because when they speaks, usually you can get a webinar, a webcast for free in Bloomberg, in the BBC, or Forex Live. Or usually I like to trade into an event, which I cannot show you this week because we don't have anything. So I'll save that for next week. Aside from that, you could trade a deviation, but I would just warn you, without the premium service, the best free service probably investing.com, where you can get I think they have an economic calendar here somewhere. So let's see. I haven't used it. I just heard from other traders. They say it's a pretty good calendar, quite fast. So don't hold my word, because I don't want to mislead you. But if you do want to trade in, the investing.com is probably the best source. You could wait to trade a deviation. The other downside is that you don't have a maximum and minimum number. So the only thing I jump in is when my premium service will always have a maximum number and a minimum number. And I only take trade when the number is outside this range. So again, if you are interested to trade any of these events, please email me privately an email address, which I will send out to all the members. You probably already have it. Email me, and I will be more than happy to give you the data point. It will be easier for me to type out, right? Basically, I don't want to read it here because it's too confusing. So I will type out exactly events. Type out the number that this is last week, by the way, number you're looking for. For example, last week, personally, I trade core retail sale. Why? Because 1.5%. Now you can say, okay, how do I know this is good number? Because I have Reuters. Reuters give me a MAC number, and this was a positive deviation. So for me to trade these events, first thing I want both of them to be positive. I want to have a consistent, and that was a result. I want one of them to at least give me a positive surprise, which came out from a core retail. That's why I took this trade at the which pair I choose? Pound CAD. I took a trade short Pound CAD right here. Exactly. You see this? Did you see this red candle? That was where I got in, and basically a very shortened trade, 25 pips only, and I was looking just to profit at a previous low and wrap it up and see what happened. Is that it rebound? So that's what I'm trying to tell you, that if you trade in British pound nowadays, be very careful. Don't hold it on longer than an hour or two, right? Not worth the risk, because the political updates is going to really be up down movement. So you have a very high risk to holding a pound trade. So that was just one example I did last week. I also trade Friday with a CPE. And as I mentioned, because it's a mix, so I don't want to trade. I didn't trade this kind of events if it's a mix. So again, if you're interested to trade any of the fundamental data for this week, please email me. I will give you a number that you should be look out for. And also, I will suggest you to use investing.com, which has a faster release than Forex Factory. Okay, so aside from that, personally, I already tell you what I'm looking at. Just to give you a very quick recap, I'm looking to buy or sell Canadian dollar, depending on what kind of statement on Wednesday that government policy is going to speak. And I'm also looking to trade British pound, depending on what kind of statement Carney is going to give. I'm also looking to trade Australian dollar, depending on the Chinese manufacturing data, which is going to be released on Thursday, 9 a.m. New York time. Finally, also looking to trade US dollar, depending on what kind of statement Yellen is going to give. Also, what kind of result we have from the PCE, which is going to be released on Friday. No, sorry. Yeah, Friday right here. So again, if you want to trade this kind of events, you need a deviation and you need a maximum and minimum number, which again, feel free to email me and I will give you that number. So aside from that, that's a very simple trading plan. Now, I understand the market is very dynamic. That means anything can happen and completely turn over my weekly analysis. And that's why you have to be very flexible. Now, I'm only going to do this kind of video once a week because my schedule is simply too busy. But if you are not sure or you want to know more, feel free to email me during the week, or I might just do a quick chat with you if you want to know more, and it will be very easy for me just give you a sort of breakdown, especially when we have this kind of central bank speaks 1, 2, 3 days. It's definitely going to change the market perspective completely, and that's totally fine, right? All you need to do is keep your finger on the pulse of the market to have a better chance to trade. Okay, so that's it for now. I think I will finish it up, and I hope you enjoy this video. I will try to do it. First I'm using YouTube, so I will see how it works. Thanks for watching, guys. Cheers. Bye.